Hello everybody, my name is Michael Harkey. Welcome and thank you for joining us today. This is Insurance Review Iteration 2, Questions IT Should Ask About Insurance. And so it's time. I'd like to introduce our speaker. He runs our company, Infotex, a managed service security provider, and is also the awareness guru of Indiana, the man with 13 letters after his name, and they all spell incident response. Dan Hadaway. Dan?
Thank you very much, Michael. If you haven't seen my webinars before, Michael always kind of starts off with some kind of a funny description of Dan Hadaway. And then I like to do a shout out. I was going to do a shout out to a person named David Zom of Robley Insurance, but I forgot to tell him about this webinar until last week, and he's actually not going to be available for it. But thanks to a lot of his help, we were able to take our webinar that we produced in July of 2015 about what IT people should be asking about your bank or credit union's insurance programs, so that your incident response team is in a good position to know what insurance covers when you're in the middle of an incident. We've taken it to the next level, partially with David's help, partially with a lot of research that we've done on our own. And so we have a pretty aggressive agenda. I'm hoping I can get this finished in an hour. Know that we will have a movie available within a month of this webinar. In case I do go long on the length of the webinar, you'll be able to download that movie and pick up what you might have missed at the end if you have a hard stop at 10 o'clock. We're going to be talking about risk management in general, just to kind of make sure we're all on the same page about how insurance really fits into transferring risk. I brought along a few horror stories of what I'm hearing out there, what we see, out there in terms of people that didn't do a good job of reviewing their insurance. And then, of course, we're going to get to the cusp of the deliverables with this webinar, the questions that you as an IT professional should be asking when it comes to transferring risk. So, let's just start off with the risk management component here. I would like to, before we get too far into this, make sure that you're all aware of the fact that I am not an insurance expert. Up until, about 2012, my eyes would just glaze over whenever anybody talked about insurance, because my partners, there were all three, CPAs, they handled insurance for Infotex, and therefore I didn't have to worry about it, so I never really even listened. But I would say about that same time, I bought Infotex from my three partners, and therefore had to start handling insurance on my own. But also at that time, I started having audit clients asking if we could review their insurance to make sure they had appropriate insurance coverage. And so, of course, we rolled up our sleeves and learned what we needed to learn in order to review insurance from an audit perspective. And that was really when Infotex, who is in the business of helping people respond to incidents besides auditing, started realizing that insurance was an extremely important part of the incident response process. Now, we also are adding to that the fact that we need to review insurance when we do a vendor management due diligence process, which, interestingly, most of our audit clients already had a decent process in place for reviewing the insurance of their vendors. And so the iteration 2 of this webinar, one of the main differences is, A, we've taken our deliverables to the next level, but B, we've also brought in what we see people doing from a vendor management perspective as well. And so if we back away from the trees to see the forest, what we're really talking about is risk management, technology risk management. And if you remember, there's three primary processes, interrelated processes that take place when it comes to managing risk. First, we try to measure the risk or identify the risk or become aware of the risk. And then we develop a process for responding to that risk, either trying to lower the risk with mitigating controls, or trying to, transfer the risk with insurance, or accept the risk by escalating it to the owners of the company, which for most financial institutions would be your board of directors or, the committee, the audit committee that has board members on it, that sort of thing. And then finally, and this is really the main business that Infotex is in, is we then need to monitor that accepted risk. We need to, watch for, exploits of the vulnerabilities that we identified in the measurement process. And of course, this is a cyclical process. Most people are doing their risk assessments on an annual basis. Of course, we also have, ongoing risk monitoring and ongoing risk measurement so that as new threats are discovered, we're able to respond to them in a more timely basis than annual. So the whole content of this webinar really falls in the respond portion of risk management. That what we're really talking about with insurance is, hey, we're going to transfer this risk, at least the financial cost of this risk, to a third party, our insurance company. And really, when it comes to responding to risk, again, we can mitigate it, we can accept it, or we can transfer it. There's other ways to respond to risk, but this is the three primary methods. And so when it comes to transferring risk, we've got 5 different things or 4 different things according to this slide, but I always, add a few more to it. But we've got different types of risk transference. We can transfer the liability, damages to third parties. We can transfer our own losses or damages to the first party. And we'll be talking about the difference between first party and third party because cyber risk insurance does distinguish between those types of risk transference tools. We also can transfer the cost of managing an incident, both the forensics aspects and the notification aspects, as well as transferring the cost of managing our reputation. We will never be able to actually fully transfer reputational risk even if we're outsourcing. One of the main values of outsourcing a process, say our online banking process, is that if there is a breach, we can always blame the company we outsourced it to, but we still take a little bit of a ding in our reputation when that happens. And so over the years, we've been seeing new tools pop up to help people transfer the risk of somebody breaking into our networks. And the value of cyber insurance is that it does serve as a good risk transfer mechanism. This was obviously not caught by our spell checking program. It assists with the incident management process, and then also it helps motivate risk management or risk mitigation practices, because a lot of times our insurance companies are wanting to make sure that we have certain basic controls in place. For an example, antivirus, is usually something that, insurance companies will codify into the actual insurance policy. And so just kind of speaking historically about the evolution of what we're now all calling cyber insurance, or data breach insurance is what some insurance companies are selling it as. It really started about 20 years ago when technology firms were relying on their errors and omissions insurance to pay claims when there was, some sort of mishap in the, use of their technology. Insurance companies started calling that network security when we started seeing those claims arising from the breach of our networks, and so they spun off a different package or a different product from the errors and omissions insurance, because they wanted to have different requirements than they would normally have for errors and omissions insurance. And then we started seeing around 2010 the cost of responding to a breach being included in those packages. That's when we started seeing privacy insurance or data breach insurance, data privacy insurance, what eventually ended up becoming what we now call cyber risk insurance. We really feel that by 2011, we're really only in the innovative phase of adoption. In other words, right now I feel like we're still in the early adoption phase, maybe the early majority phase of adoption. If you look at insurance on the same, evolution path of the adoption of technology, we're still about less than half of the market has acquired this type of insurance. And so there's still going to be a lot of changes, we think, in the way cyber insurance is handled and treated coming up over the course of the next few years. There's really 4 different cost areas that arise whenever there's a breach of data security. Of course, the cost of responding to the breach, which really, is basically, what most people worry about. But recovering from the breach, damages to the third parties that might be affected by the breach, and then, of course, legal and regulatory costs are also a big part of the cost equation. And so if we just kind of drill down a little bit, responding to the breach not only includes recovering from the network, but if there was some sort of denial of service, we're of course going to have a loss of revenue. There will also be operational losses. On a regular basis, we'll see clients say, well, we didn't have that done yet on time for the audit because we had this big breach and we were all busy responding to the breach. Operational losses are intangible, but they're a huge part of the cost of responding to a breach. And then we have what I call reauthentication costs. You experience this every time you have to send out new credit cards or new debit cards because some vendor has made a mistake and there's been a breach or there's been some sort of detected fraud. But there's also reauthentication costs. If somebody's been on your network, you're definitely going to want to make sure everybody in the organization resets their passwords. Twice last year, I had to remind my wife and my daughter who use Yahoo Mail that they need to, either get on a different email package and they need to change their password or delete their account in their Yahoo Mail system because Yahoo was breached twice in the matter of 2 months. Forensics, of course, is a big part of the responding to a breach cost. And really, at the response method, what we're really all we're talking about there is the preservation of evidence. We hope that we don't have to analyze that evidence. We hope that forensics doesn't have to go beyond preserving the evidence. But if you've got a good incident response program in place, you will always preserve the evidence whenever there is a breach. And that's going to be cost whether you do it yourself or whether you outsource it to another company. Finally, media relations and, dealing with the people that have found out about the breach. The reputational damage, again, is something that probably is never going to be fully transferred to a third party. Then when it comes to recovering from a breach, this is after we've contained it. This is after we've, protected ourselves. We still have revenue and operational costs, losses due to, customers that can't use our systems or customers that are mad at us and won't use our systems, the time it takes to address all those issues, following up on reauthentication, just sending out the message saying, hey, everybody needs to change their password is not really, that's definitely responding to a breach, but we also need to follow through, make sure that we did change our passwords, go through all the 9 yards of making sure we use strong passwords, et cetera, et cetera. There could be loss of data that arises from a breach. And then if we're unlucky, we might need to hire some pretty expensive people to come in and analyze the forensics so that we can figure out exactly what happened, especially if the lawyers are starting to get involved. Of course, we need to notify our customers. And, we want to make sure that we, handle that properly. Very often we're going to offer credit monitoring as part of the notification process. And then, of course, something that can't be fully transferred is that loss of our reputation. If we're really unlucky, we might end up in a situation where our customers have experienced true harm because of the breach. It's a terrible thing, but fortunately, if we have good, solid insurance, we can at least make them whole by transferring that risk to our insurance company. Of course, we still have that reputational loss issue. We still might want to extend credit monitoring. We might want to help people, change their identity information and help them with identity theft issues. We really might be into the analysis phase of forensics pretty deep because we're in litigation. And that's when the forensics gets really expensive. It goes, you know, the collection, maybe you're talking $250, $300 an hour. The analysis, we're talking $500, $600, $700 an hour. But if you've got to have a forensics expert testify for you, you could be talking $1,000 an hour just to get somebody in and figure out what's going on, read the forensics analysis reports, and then be an expert witness on the, you know, hopefully not on the witness stand, hopefully in a deposition. You're going to spend a lot of time with lawyers. Your insurance premiums are going to rise. If you're in this kind of situation, you're definitely experiencing reputational damage. And, of course, all the time it takes to deal with the litigation. Usually by the time you're done, even if you win, you always wonder if it wouldn't have been just better to settle in the first place, even if you were in the right. So I kind of alluded to this several times. What's never covered is the loss of your reputation. Loss of revenue is sometimes covered. This should say loss of future revenues. That's so important. I really feel like I ought to stop this webinar and change that. But, you know, some insurance packages will cover loss of revenue. You need to check to make sure that's the case. But what is never covered is loss of future revenues. And so if your reputation is taking a hit, there's going to be loss of future revenues because you're going to have less customers, and the insurance companies are not going to cover that for you. Meanwhile, usually, I mean, back in the day, you know, when we first got started, before thankfully the FFIEC started requiring, you know, our intrusion prevention, intrusion detection, event log management, our SEM, the customers that we would pick up were usually organizations that had just suffered a breach. And so they, you know, spent money on Infotex to come in and help them improve their security posture by watching their network for them. There's always going to be that. The long and short of it is that usually if you have a poor security posture, it's because the ownership of your organization, you know, your board of directors has their head in the sand. They're not really seeing the benefit in security. And then there's this big breach, and next thing you know, you're busy, you know, putting all your other plans on hold because they've decided finally we want to secure this situation. And so you're spending a lot of money on improving your security posture. And then meanwhile, you know, especially for breaches of intellectual property, but even when you have had a customer information breach, you don't know what kind of, you know, intellectual property they might have taken while they were, you know, perusing your network. And so what is the value? It's definitely intangible, but there is lost intellectual property, and insurance companies are not going to cover the cost of lost intellectual property. So on our portal, Mike's going to make it available to you now. I'm going to go ahead and try to launch it just so you can see, and I don't think Mike and I even talked about what we've got there. I'm hoping, Mike, can we see Windows Explorer here?
Yes, we see it.
Great. And so Mike is going to be sending to you this document here that says insurance considerations, and I'm going to be walking through that a little bit here when I get to it in my slideshow. But it just kind of walks through the different types of insurance that you or vendors could carry. This is really more from a vendor management perspective than an incident response perspective, but it really will help you, you know, put everybody on the same page about, you know, what we really mean when, I guess now is when I wanted to walk through that. So we're going to make this available to you. This is the results of our research. We're not insurance experts. I was hoping that, you know, some of our insurance friends could review this, but this webinar snuck up on us and we weren't able to, you know, no insurance expert has looked at this. But based on our research, we, you know, have organized this to start with most businesses. And boy, if there's a business you're working with that does not have general liability insurance, I would think really twice about working with them, because if there's any kind of issue, you know, I mean, where they cause harm to you, they're probably, if they can't afford general liability insurance, they certainly can't afford to make you whole. And so this is the type of insurance that covers third parties. And so if you're working with a vendor and the vendor causes harm to you, this is how you're made whole. This is where they're transferring the risk of causing harm to you. For your own financial institution's insurance package, basically you have general liability that covers a lot of different things, but it's meant to cover your customers or other third parties. They might not even be your customers. If somebody slips on a sidewalk in front of your branch, you could get sued. The general liability insurance is what would cover that. Property insurance is a first-person insurance tool. It covers losses to you or to the person who is insured, to the person that owns the insurance. So you want to make sure your vendor has property insurance, especially if they represent business continuity risk, because we want to make sure that they can quickly recover from a disaster that causes, property damages, right? This pretty much goes without saying. Most people are, definitely most banks have property insurance, but it's meant to take care of the insured person. It's first-party insurance. Business interruption insurance is really where the insurance company will cover a loss of revenues. And so if you had a denial of service that cost you, and you can demonstrate and document that we lost X amount of dollars in revenues while we were recovering from a disaster or denial of service attack or whatever, the business interruption insurance is where we transfer that type of risk. The errors and omissions coverage is really the type of coverage that you want to make sure your auditors have. If you're working with an IT audit firm or even a consulting firm, and they give bad advice and it costs you money, and you can demonstrate the damages that their bad advice caused, this is where they're transferring the risk to the insurance company. And so anybody that's auditing you, anybody that's providing consulting, to you, should be carrying errors and omissions insurance. By the way, a lot of insurance companies now call that professional liability insurance. Cyber insurance is kind of a blend of errors and omissions, liability, crime, property insurance. It really is a blend, and that's the reason why it's continuing to evolve, I should say. And we're going to be talking more and more about cyber insurance, so I'm going to kind of skip to that. This second page then includes the types of insurances more from a vendor management perspective, and don't get me wrong, your financial institution might have key executive insurance. If there's somebody on your team that is very important to the continuity of your business, the financial institution might have taken up life insurance out on that person. I know at Infotex we have life insurance on me. If I die, the insurance company is going to pay money to Infotex to cover the cost of hiring somebody to replace me and that sort of thing. If you are working with a vendor that has a fleet of vehicles, you may want to make sure that, somewhere in their insurance package, somewhere in their due diligence package, they do have, sufficient vehicle insurance. If you're getting that far in your vendor management due diligence, I would be very impressed with you. It might be one of the lower, priority items, but it is something that, should be carried by vendors that have, a fleet of vehicles. And likewise, same with your own financial institution. If you've got, people that you're currying, information around, you want to make sure you have adequate coverage there. And again, this isn't really something that IT people need to check, other than maybe for your shredding companies or your courier services. One last type of insurance is workers' compensation insurance. It's required by law in most states, so I really feel like it's probably going to be a waste of your time to look into it in vendor due diligence. Finally, we do have some information about first-party and third-party insurance in this document, and then, of course, the certificate of insurance. And then I also wanted to make sure that you understood that if you're listed as a certificate holder, all that means, that doesn't mean that you get in a better place in line. I actually thought that at one time, that if you're a certificate holder, that meant that, they had to pay the claim to you before people that weren't certificate holders. That's not true. What being a certificate holder does mean, though, is that if the policy is canceled, you will be notified. And so I think that for your critical vendors, for vendors that might be, you're looking at their financial statements, you're starting to worry about them from a financial perspective, you definitely would want to become a certificate holder. And all you have to do is just tell them, hey, I want a certificate directly from your insurance company. And what that means is that they will notify you if that insurance is canceled. And so I brought up, I had to redact the coverages because I'm just not sure if I wanted to, go there, but I brought up a copy of our insurance certificate just to kind of walk you through this. This is not the whole certificate. It also lists, the insurance, company, the policy number, some very important information is listed up at the top. And then, of course, at the bottom left is where they list you as a certificate holder if you've jumped through that hoop. But I just wanted to, kind of show you that this is really the part of the insurance certificate. This is the proof for your vendors. When you're looking at your own insurance, of course, you're going to want to dive into the actual policy and ask the questions I'm going to be getting to. But when it comes to reviewing your vendors, you definitely want to make sure that you've got policy numbers, that you are checking the expiration dates. If we were reviewing this right now, we'd be saying, hey, look, I see that your liability insurance expires on November 16th. Can I get an updated certificate because this is old, right? Likewise, our professional liability insurance is due to be renewed in February. Because of this, we always send out our new certificates to our clients in our due diligence packet that's made available in April. That way we've got, certificates that are current and not expired. The other thing you always want to look for too is, is it listing, this is our errors and omission, but we also have data breach insurance, and it lists the coverages over here. And so if you're working with Infotex, one of the things you want to do in your risk assessment is decide what is the cost of a breach. If we had a breach that, and you really should be doing this as part of your incident response planning and your risk assessing anyway, but if you've got 10,000 customers, how much is it going to cost if the data for all 10,000 customers was breached? And then you want to make sure your own insurance policy covers that. But also, you want to make sure that anybody that might be involved in protecting that information, for an example, Infotex, has adequate coverage to cover that many customers. And so if this over here said $10,000, you'd be in a world of hurt. If it said $10 million, you could feel a lot better about the data breach insurance that your vendor carries. So, cyber insurance is relatively new. It's about technology, so we expect it to change and continue to change. And we don't want to end up with a false sense of security just because we have cyber insurance. I very often will hear people saying, well, I'm not going to worry about that because we have cyber insurance. Well, you definitely need to worry about it because you have cyber insurance. It's a good tool as long as you're using the tool right. But it would be like saying, hey, I'm going to buy this, this chainsaw, but I'm not going to spend any time learning how to use it. That could be dangerous. And so, we really want to spend some time rolling up our sleeves and digging into what it means to have our cyber insurance. Are we required by our regulators to carry cyber insurance? Not that we've seen. We in our research, we saw the New York, Department of Financial Institutions threatened that they were going to put it in their requirements, but the cybersecurity assessment tool doesn't include it. And we do have, and Mike's going to make a copy available to you. We do have some mention of cyber insurance or insurance as a risk transference tool in the management booklet that was published at the end of 2015. That we think, by the way, your examiners are going to start enforcing and supervising to it in 2017, just based on what we've seen in the past with new guidance. But on page 32 of that guidance, and I'm looking at the time I've decided I'm not going to dig into it, I would go out there and read that so that you know what the guidance says. But suffice it to say, it's not really telling you what kind of insurance. It doesn't give you a lot of guidance. It just basically mentions that you can include insurance in your mitigation strategy. And then it talks about the fact that management needs to understand the needs of your organization from a technology perspective, and that management should also understand the limitations of the insurance as a risk transfer tool, which is really where I'm heading with this webinar. And then, what kind of exposures to loss do we have? Again, one of the big questions that needs to be asked and that you should pull a pencil out and try to get a handle on, and you don't have to be accurate, bad accurate, you just want to have a ballpark figure, but what is it going to cost if we have a black swan event where all of our customers' data is breached? How much is it going to cost us to notify every one of our customers? What kind of damages could we be sued for? And do we have enough insurance to cover those damages? And when we say management, when the Information Technology Management Handbook talks about management, we're not really talking about your CFO. And don't get me wrong, your CFO is probably the one person in your bank or your credit union that fully does understand your insurance package, because that person is the one who usually procures the insurance package. But I have audited a lot of institutions where the CFO says, when it comes to that, I still haven't got my arms around it. Well, we need to get our arms around it, and I believe it's the incident response team that should do that work. Most CFOs are going to like it, I'm saying this, but the CFO should really be ordering insurance based on what the incident response team's analysis has decided that the financial institution needs. One other thing about the guidance is it basically says that you should have an overall appraisal of the control environment in assessing the adequacy of your insurance program. So what we're really saying is that if we've decided that, we're not going to have a particular control in place, or if we've got, this accepted risk because we don't want to pull the trigger on a particular control, then we better make sure that our insurance covers the fact that we don't have that control in place. And a good example is that I'm still running into banks who are like, what, our examiners aren't saying we need a scene, and so we're not going to have a scene. Well, then let's make sure we have good forensics, because if you don't have a security information event management system in place, you're going to need to hire a forensics consultant if there's ever a breach, right? And so let's make sure that our insurance covers forensics. Let's look at that policy, make sure it covers, and maybe bump it up a little bit from the default coverages that your insurance company might have established for you. And then meanwhile, what risk are we accepting, and can we transfer any or all part of that risk? So in the interest of time, I'm going to kind of move past this management guidance and really move into the second part of our agenda here, where I just want to talk a little bit about the changing nature of insurance, and I'm going to kind of use that at least to start off with some horror stories, and then from there we'll talk about a 6-step process we've developed for doing an insurance review. And so Mike, if you wouldn't mind, I'd like to trigger that poll just to kind of see where people are in the audience in terms of their insurance review. And really what we're talking about is it just now getting on your radar? Have you been doing insurance review as part of your vendor management program? Or is this really more of a review for you and you're already doing insurance review from vendor management and an incident response process perspective? And so while you're answering that poll, I'm going to go ahead and start talking a little bit about our horror stories here, starting with the fact that I ran across this, a couple of years ago when I was researching insurance, and I thought it was kind of an interesting, funny little story. But over in the Middle East and Europe and in some places of the world where there's not a lot of regulation, they would sell Chinese hacker insurance to unsuspecting small businesses, and then if they got hacked, first, in order to get any claim, they had to prove that the attack came from China. And then even worse, the insurance companies would often require them to use the insurance company's forensic company in order to develop that proof. And so these small businesses were really just buying, swampland in Florida, more or less, because it was a worthless tool. Now, fortunately, here in America, we don't have to worry about that because our insurance industry is regulated, maybe not as heavily as the banking industry, but it's still pretty regulated, and they would never be able to get away with something like that here in America. Still, we are running into a lot of horror stories in America. A good example is, and I haven't seen this personally, but I read articles about companies that decided to go ahead and notify their customers, even though it was really a gray area in terms of whether the law required them to notify their customers. And so, you know, the insurance company wouldn't pay it because buried in the insurance policy was, you know, we will pay whenever the law is requiring you to notify your customers. And so they ended up being surprised. You know, I can just see in an incident response team meeting saying, hey, you know what, I think we ought to do the right thing. Let's notify our customers. At least the insurance is going to cover it. And then they go to file the claim and they find out, no, the insurance doesn't cover it because you did, you went above and beyond. You didn't follow the law. Meanwhile, I have personally witnessed this in several of my audit clients where the insurance policy would exclude known malware from coverage. Or what I've seen is they've had a higher deductible or they've had a limit on what they've paid for known malware versus you know, zero-day malware. Very, very, you know, frustrating if you know, have a malware attack and you know, you're finally in the recovery process, you go to file the insurance claim and you realize that, hey, even though we responded thinking we were going to be able to transfer the financial costs of this malware attack, we can't because it has a higher deductible, which is the deductibles I've seen have been very, very high for known malware. Meanwhile, Target, if we all remember the Target breach because of how poorly they responded to that breach, but adding insult to injury, when they were finally done responding to the breach and they were in the recovery process, they found out that even though it cost them $61 million, their insurance was capped at $40 million. So they had to take a $21 million loss on top of all the reputational loss that they took as well. This is why it's so important for you to try to determine what is it going to cost us after damages, after the cost to notify customers, after the forensics, you know, in a black swan incident, meaning, you know, the worst thing that could happen, what is it going to cost us? Where do we want to set our insurance cap at? I'm pretty sure that Target would have been willing to spend the extra money to bump their insurance up to maybe $75 million, given that a huge incident cost them $61 million. Do you remember the Sony incident? You know, it was in 2014. And that was when, remember, the guy from Korea was mad that, you know, they had this movie that was, you know, making him look bad. And so they hacked into, you know, they had already hacked into the executive's email system way back in 2011, but they went ahead and released all that information in 2014, really making the Sony executives look bad and made them look like racist, that sort of thing. A lot of damages, but when they went to their insurance company to try to recover some of those damages, it turned out that the insurance only covered actions by Sony employees and not third parties. One of our clients engaged with us for the purpose of getting cyber insurance. Yeah?
It's not even lunchtime yet. Can you cool it with these scary stories? I'm feeling frightened, not enlightened.
All right. Well, I mean, okay, I can. I was going to give away $1 million to whoever
carry on.
Answers to this.
Carry on.
No. That's not. We'll go on. We'll go on.
Sorry, guys.
The point I guess I'm trying to make. The point I'm trying to make is that no two insurance packages are alike. Okay, especially in commercial insurance, and you don't want to have to investigate insurance provisions when you're in a panic of an incident. And so we need to get out in front. The whole point of all these horror stories is we want to get out in front of an incident as much as we can. We want to be prepared for that incident, and we want to know fully what our insurance is going to cover. Likewise, if one of our vendors, if we've identified somebody as being a critical vendor, we want to at least know that they can make us whole if they screw up and you know, we end up getting sued because of something that they've done. And so the implications is that you need to develop an insurance review process that needs to be both part of your vendor management process and your incident response process. And so, you know, that process really needs to be based on the fact that there's 4 different types of, you know, cyber insurance. The multimedia liability is what's going to cover, you know, having a coach to help us if the press gets in, you know, they decide they want to, you know, increase advertising revenues at the expense of your institution. It's probably not that necessary for your bank. But, you know, how about your online banking provider? Are they going to be able to cover, you know, handling a huge breach? Extortion liability. Well, you know, back in the day, most people are like, you know, why would we need this? Well, now that we're all aware of ransomware and distributed denial of services attacks, hopefully you're looking at extortion liability when you're reviewing your insurance coverage. Of course, network security and the cost of bringing network back up and the cost of, you know, damages because of a, you know, data theft or you know, any kind of, you know, network security breach needs to be included in your insurance review. And then finally, you know, the cost to, you know, investigate and respond to an incident, to provide credit monitoring, any kind of associated legal fees also need to be part of your insurance analysis. When we talk about insurance analysis, what we encourage you to do is to enlist the help of your insurance company. I have been told by audit clients, well, our insurance company's never going to, you know, go to that level to help us understand our insurance. But I've actually, you know, we've called the insurance company from the banks I was auditing and demonstrated that that's wrong. Your insurance agent should be working with you to make sure you understand what your insurance package provides to you. There's a big, you know, plus for them in it, because very often you might end up adjusting your insurance and therefore avoiding, you know, them losing you as a client when there is a claim. And very often you might end up buying more insurance because of what you learned when you're going through your insurance analysis. But don't look at one policy at a time. You know, if you're working with more than one insurance company, this is a little bit more difficult. But if you put all your eggs in one basket from an insurance perspective, your insurance broker should be able to help you decide which policy covers this, which policy covers that, and it really should be coverage-centric rather than policy-centric. It should be based on your risk assessment. Where is your accepted risk? Where is all the risk? What is the damage that's going to be if a threat exploits the vulnerability, and are we properly covered in order to transfer those damages? I feel like, you know, of course, the vendor insurance review should not be as extensive as your own insurance review. You just want to make sure you have appropriate coverages and the right types of insurance in a vendor review. But your incident response team is going to have to roll up their sleeve and find out exactly what's covered, what the deductibles are, what the limits are, and how to notify the insurance company. Do we use your forensics firm or can we use our own forensics firm? You might even want to have a conversation as to when you will go ahead and eat the cost of forensics, because you don't want the insurance company to use the forensics review and their own forensics person to prove they don't have to pay your claim. It should involve, of course, your vendor owners for critical vendors. And so the 6-step process that we have developed is A, finish your risk assessment, identify where that risk is, identify where you're going to need to transfer the risk, which is usually in the areas where you're accepting risk, right? If there's low risk, we don't need to transfer that. If there's high risk, we want to transfer that. And then develop your questions list, which I'm going to show you real quick here. It's not a, you know, easy process to develop the questions list, because we've come up with a lot of questions that we feel. I tried to whittle it down for iteration 2, and I decided, you know what, if we do that, then what's going to happen is that you're going to miss asking a question that applies to you that should have been asked, and then what's the whole point anyway? And so you'll see, I mean, I'll go out to the question list now, even though it's probably called for later in the webinar. Oops, this was the old one. The new question list. Got to move it over here. And so what we did is we came up with this, you know, how we always have these really extensive spreadsheets that are deliverables. Michael will be forwarding this to you. Mike, make sure you grab the one. It's the one that's January 15th, not the older one. And what we have here is, you know, this, of course, all of our boilerplates have this boilerplate at the front of them. You want to read that. We're basically saying that you get the copyright to it once you customize it to your own organization. But don't share it with anybody without our permission, other than your auditors and examiners, that sort of thing, of course. And And then this is the insurance review. This is just a list of questions that you could ask during an insurance review of your vendors. And so if your auditor's saying, hey, I see that you're insuring, you're reviewing insurance, but what are you actually doing? And usually the CFO is usually who I talk to, or accounting department manager, or whoever's in charge of insurance. They always say, well, I just get the certificate of insurance, I make sure they have it, and I file it. Well, this will give you a little more detail as to what questions should be asked. And of course, you get the ability, to document the coverage amounts here. If there's any exclusions or if there's any notes, of course, you want to take them. Is it sufficient? Yes, no. And if no, well, what's the risk of it not being sufficient? Because we don't want to spend a lot of time chasing down low-risk stuff. And so with all risk assessments, really, we're talking what's the likelihood of that causing a problem? What would be the impact if that problem materialized? And that gives us the overall risk. And, we've got suggested risk rankings in this tab over here. And so this is the vendor management. As you can see, there's 10 simple questions. We didn't kind of completely clean this up. But anyway, it's a good starting point. All our boilerplates are starting points. We're not saying they're perfect, but you can mold this into a decent paper trail document that you can then use to show your auditors exactly what's happening when you review insurance of your vendors. I wouldn't review the insurance of a low-risk vendor. I would focus on your critical vendors, maybe some of your high-risk vendors that might be having financial issues, or that, you're not completely, jumping up and down with joy about their financial position. And so, hey, a mitigating control of them having poor financials is that they have good insurance. And so maybe this review is, maybe that would be where you use it for non-critical vendors. But this is the question list that I was saying is a little bit intimidating, but don't walk away from this because it's so detailed. Right now it's sitting at 50 questions. We did risk rank them for you, but if you notice, there's really only one that we say, hey, you should be asking everybody. But I would risk rank this before you send it to your insurance provider, and only have your insurance provider answer the questions where if you didn't like the answer, it would expose you to moderate or high risk. Again, does it apply to you is a question we have in this one. If not, it takes the metrics out over on the right. What kind of a question is it? There's a lot of questions here. But what you want to do is you want to, as part of that 6-step process, is you want to develop that question list based on risk, and then meet with your insurance agent. Don't just send it to your insurance agent. Fortunately, when I've been working, I've been hired to help organizations develop their insurance review process. We went through the insurance review with them the first time, and I met with the insurance agent, and I talked them into going through the question list that we whittled down for them. And be sure to point out that, hey, this was 50 questions strong when we started, but we got it down to 30 questions or 25 questions or 35 questions, or sometimes it might be all 50 questions. But what I want you to know is that your insurance agent will work with you to answer those questions. If you're patient, give them plenty of time. They will put their writings in, or their answers in writing. If they put their answers in writing, you still want to sit down and talk to them about it, because there's a lot that they will say that they won't put in writing, right? I mean, you can't blame them. They got to be very careful, and they're very, very, keen on making sure that they set the right expectations. And then you might end up lowering coverage in certain areas. One of my banks, we found out that, the total cost of notifying their customers would probably be about $5,000, but they had like $80,000 in their insurance policy to cover notification of customers. So we were able to lower that and bump up another area that this particular bank needed to bump up, and we actually ended up spending more money in that particular case, but it wasn't as much money because we realized that we didn't need to have as large a customer or a coverage for certain parts of their insurance package. And then finally, document key metrics, key information in your incident response plan. And our incident response plan boilerplates, which we are not handing out as part of this webinar, but we have a set of questions if you come to our incident response workshops. We have plenty of webinars coming up on incident response. You can probably get a boilerplate then. If you're a client of ours, let us know. All our boilerplates, of course, are free to you. But there's a set of things that you want to know when you're in an incident. You know, do they cover credit monitoring? How much credit monitoring do they cover? Do they require us to use a certain credit monitoring company? If not, do we have some alternatives that we can choose from? Who's going to be in charge of going out and finding those alternatives? You know, et cetera, et cetera. I'm finally now getting to the last part of the program here. We've got high-level questions. You know, we've got that insurance risk analysis. Mike, how did the poll turn out?
Sharing those results now. We have 50% said just getting started at reviewing insurance, and 50% said reviewing insurance with vendor management and incident response.
Oh, okay, good. So we've either just getting started or we're already doing it as part of both processes. So I'm glad to hear that. The people who are just getting started, this probably is looking intimidated. I wish you could talk to people that are already doing it for both processes, because it really turns out to be worth the time. Again, you know, everything we're handing out to you today are starting points. You're going to have to customize this to your own organization. I would be careful simplifying that question list too far, at least on the incident response side. So first of all, you know, who's responsible for insurance in your organization? I feel like most banks and credit unions are there now, where they at least know, the IT people, the information security officer knows who he or she needs to work with to get their arms around their insurance package. But very often we're still running into financial institutions where the person who actually acquires the insurance does not feel comfortable about their cyber insurance. They don't understand it. They're always meaning to get with their insurance agent, but they're probably procrastinating because it's technical. And so you might end up being seen as a hero by your CFO when you turn to them and say, hey, I want to help you get your arms around cyber insurance so that my incident response team can know what we need to know when we're in an incident. How does the insurance get approved? If we decide, hey, credit monitoring isn't enough, we've got enough to cover $50,000, but when we did our analysis, we decided we're going to need $75,000 if we have to notify all of our customers. You know, how does that get changed? Who should be put on the incident response team if necessary? I've run into a couple banks where they're basically saying, hey, we didn't put insurance in our incident response plan because we have the guy in charge of insurance on our incident response team. And that's actually two different banks last year told me that. One bank, I interviewed the insurance person, and that person knew the insurance like the back of her hand. I felt like that worked there. But with the other bank, they were like up here. They were like, well, being honest with you, I'm on the incident response team, but I don't really know what's going on, you know, on the cyber. For both banks, I didn't put it in the report, but I still felt like they should document what their insurance person knew about cyber, because what if that insurance person's not available when you're in the middle of an incident? Do we hold everything? Hey, sorry, bad guys, but we need you to stop attacking us right now because we got to wait for our insurance guy to come into, you know, the bad guys obviously aren't going to, you know, cooperate with you on that, right? So what should be documented in our incident response plan? What does our policy cover? What does our policy not cover? All very important questions that should be asked as part of the incident, you know, your insurance review. What risks are we accepting? And does our policy cover those risks? Of course, how much coverage per incident? How much coverage lifetime? Where should our deductible be? You know, if we decide that, hey, you know, notify it if it's 1,000 customers or less. You know, I mean, I feel like we can notify them ourselves. We don't really need a lot of help with the notification. But then we have $10 billion in our coverage to cover notification. You know, maybe we can, you know, lower that coverage. Or maybe we increase the deductible because we've decided that we can handle it on our own in certain cases. And then, of course, what exclusions are there? Look for those known malware exclusions. I see them in a lot of policies. By the way, it's a question in that insurance risk assessment that, you know, Michael's sent out to you. And then again, you need to make it coverage-centric, not policy-centric. When you talk to your insurance agents, you know, they will tell you which policy covers various accepted risk. But what we're concerned about is, does our policy as a collection provide the appropriate coverage? We might, I feel like knowing which policy covers what isn't as important, because when it's time to file the claim, your insurance agency will take care of that for you. What we want to know is, does it cover our employees, doing an insider, breach? Does it cover subcontractors? Does it cover our vendors? Does it cover, no malware versus zero-day malware, that sort of thing. And so, we really, and this is where I was going to actually show you the spreadsheet. I jumped the gun on that, so, I don't have to do that now. It's very detailed, again, like I said. What I'd like to finish with is, my shout out to Dave, who's not here, from Robley Insurance. What I wanted to show you there is, and of course you can't get this, Mike, do not send this out, but this is a sanitized version of the analysis that he helped us do for one of our clients. He's actually worked with more than one of our clients since this happened, and he's very, very good about, putting, and he resells, by the way, Chubb as the cyber insurance, but you'll also, in here, I'm probably not going to have time to find it, but he would refer out to non-Chubb insurance when it's not, covered by Chubb. But then we also would still end up, risk ranking. And by the way, I changed all the risk ranks on this. I didn't want to give Chubb a bad name or anything, so ignored the risk ranking out here. But my point, the strong point I'm trying to make is that I have not yet run into an insurance provider who says, there's no way I'm going to answer your questions. I'm not going to fill that form out. Your insurance agent will work with you if you do a good job of motivating your insurance agent. So, Mike, are there any questions?
No, Dan, there are not currently any questions.
Okay, great. Well, I believe this is where Mike takes over, and thank you everybody for coming to this webinar. And don't forget, there will be a movie available within a month on tour.infotech.com. Mike, why don't you go ahead and take over from here?
And I think that's all we have for you today. We appreciate your time. Dan, we appreciate your time. And thank you for joining us today. Have a great day.
When you view an InfoTech's webinar or movie, you do so with 4 caveats. First, you're agreeing to the terms posted at the web page listed on this slide. Second, our lawyers want you to know that what InfoTech presents is often time-dated or about new trends, regulations, or guidance, and therefore we cannot provide this material with any warranty whatsoever. Thirdly, material provided with InfoTech's webinars and movies is copyrighted. You keep the copyright to material customized to your organization, but InfoTech reserves the right to use the material in other engagements and boilerplates. See our transfer of copyright agreement at the webpage listed in this slide. Finally, those who view our webinars or movies may be added to an email mailing list. If you do not wish to receive notice of additional educational opportunities, please accept our apologies and please opt out at the web page shown on this slide.